Hello and welcome back to another episode of the Investor Financing Podcast. We have a phenomenal interview guest today, and we're going to talk about a lot of exciting stuff like sourcing off-market deals, lending, mindset, doing it at a very young age, and growing your business. I heard the podcast you were talking about traction and how you implemented the EOS system, and that's probably something I need to learn about. But you've really had a lot of success early in life, but you also had failures early on. You weren't a great student, from my understanding, and you basically found some religion in your life. Your father's a minister, and you basically realized that you need to do some good stuff with your life, and then you applied yourself, became a student of the game, and here we are today. And you're like 27, 28 years old, and run a fairly large multi-million-dollar companies, plural. And so this would be a great show. So thanks, David, for joining us. He's the CEO of Leverage Companies, and pleasure to have you here on the show.
Oh, thank you for that introduction. I feel like I should hire you to be my spokesperson. No, it's an honor to have. It's an honor to be here. Thank you so much for having me. Hopefully, I can add value to your audience.
So today, let's just kind of fast forward. I think everybody always goes through your past, and I kind of want to highlight it because we don't need to talk about it, because I think what I touched on is the important factors. But you're here today with successful companies, and you really kind of built your name being a deal finder off market, and you're really good at data and data points, and I'm just wondering what that looks like for you. Like, how did you build this system where you're scraping data? And I believe you just buy in New Jersey. Is that accurate?
Yeah, we buy mostly in northern New Jersey. When some opportunities come in different states that meet our investment criteria, typically it needs to be 100 plus units for us to even look at it at a state. We'll take a look and see if it's a good fit for us, and raise the money needed for the deal.
So when you were, are you still doing any smaller single family wholesale stuff, or is that kind of like, hey, it makes more sense just to focus on the big deals now?
We're still doing the single family wholesale stuff. We pretty much got it to a point where it's running autonomously. We hired a great leadership team, trained them, and at this point in time, we're closing deals every week without any oversight on an ownership level, and so it's just a cash cow business for us now.
And is that mostly a wholesale business then, not a fix and flip?
Yeah, it's mostly wholesaling. We found that it's a lot easier to scale a wholesale business as opposed to acquiring and renovating and selling. It takes a lot more ownership involvement. So we decided to kind of walk away from the fix and flips, primarily focus on wholesale, and where the ownership is getting involved now is pretty much at the acquisition level. So if we actually decide to pursue, close on, and hold on to an asset, that's when we actually get involved.
That's pretty awesome. And then, so I guess over time you were bringing deals to these investor borrowers, and you said, wait a second, let's start a lending platform because all these people need money, and we know these deals and we can fund them quick for them. And then so you started a bridge lending company, right?
Yeah, exactly. We were doing, we started off doing just a couple of deals a year. We ended up wholesaling like 50, 60, $70 million worth of deal volume. And found that we were often having difficulty at the closing table because other lenders, promised the world and they give you an island. We found that we had an opportunity to provide a great service to our investors, but also take control of the deal and be able to deliver on our promises to our sellers as well. The problem kept coming up over and over again to the point where my partner, who comes from the lending world, decided this is what I'm going to do. And so we built a platform to take deals from, start to finish, get them done really efficiently, and give a lot more comfort to all parties involved and making sure they get competitive financing. And so, we took that company off the back of our wholesale company, and organically grew through referrals and, delivering excellent customer service, and obviously took some of the marketing that we did on the wholesaling side, taking a data-driven approach to sourcing deals, and we did the same for the lending side, and it just blew up. Right, it took 1 year to get to 100 million in loans closed, and we're on track to do a lot more than that this year.
Wow, that's awesome. And then when did you shift to kind of doing off-market commercial lead generation to find multifamily? Did you first start with like 15, 20 unit properties, and then you were taking them down because you had some capital, and then you're like, wait, the bigger opportunities to 50 to 300 units, and then you kind of said, let's start a kind of syndication platform. Is that what happened next?
Yeah, that's pretty much what happened. We weren't even trying to get the 5+ unit deals. They came in accidentally through our network of brokers, wholesalers, and oftentimes came in through our lead generation platform because the data was a little off. We were primarily targeting residential, but would come across a 10 unit. And we found that we would get massive cash outs at refi or massive wholesale fees if we decided not to buy it. And when we look back at our data 1 year later of doing it, and found that, we made like 20% of our income on 2 deals, and those were both larger assets, and said the 80-20 rule, we got to focus on really expanding our commercial presence and doing bigger deals.
And so what does it look like to be, what would you say if somebody's listening or watching this in the future and they wanted to get started? Maybe they wanted to get started in the single family wholesale space, but they want to do it as a business, not like one-off kind of deals like, hey, let's systematize this. And this is exactly what you did, right? Like you started getting data maybe from PropStream or one of those platforms, and then can you kind of give us high level of how you guys go about scrubbing data, and then what's the marketing sequence that you like to use, that you would say you would give advice to maybe somebody starting, or maybe it's done a couple deals but they kind of want to scale? Where would you have them start?
Yeah, I think the most efficient way to get deals, I mean, you've heard it 100 times in 100 different podcasts or books, right? There's no secret to this game. You need to generate leads. And leads is the lifeblood of the single family space. And that typically starts with the data, right? You find your target audience. So the first thing I would do is decide, if you're just getting started, decide what city, what area you want to target. Going after the entire state is a bad idea. Going after 5 counties is a bad idea. First thing I would do is identify a market that you're interested in, ideally close to you. From my perspective, the highest ROI on time and money spent on marketing is in more distressed areas. So I live in Bergen County, New Jersey. I focus on Essex County, New Jersey, and Passaic County, because that's where typically the most distress happens. Right? People getting foreclosed on, tax liens, evictions, areas that have distress. So target an area that you think would that in your neck of the woods, ideally, that have some indicators of distress. Identify, in my opinion, just going after one city, one town, really learning that market, right? The last thing you want to do is be in 5 different places, talking to 20 owners that day, and have to underwrite 20 deals, look up comps for 20 deals, look up and ultimately spend the next 48 hours trying to figure out what you can make offers on. Whereas if you get mastery of one city, right? For example, the city right behind me, New York, I know exactly what a 3-family is trading for, built in the 1950s, as 3,000 square feet to 4,000 square feet, right? I know what a 2-family is trading for, single family, a 4-family. I can tell you price per unit, rents, based on each submarket within the city, because you got the Ironbound section, downtown. You really want to be able to know your market So when someone says, yes, I want to sell my property, you're able to identify what you could pay for that and what your potential profit margin is within 15 seconds on your calculator, right? So first start with identifying your market, learning your market, right? Understanding what ones, twos, threes, and fours are trading for, ARV, the after repair value, and the as is value. Get familiar with what renovations and scope of works look like, right? What does a kitchen go for? What does a bathroom go for? If you had to do your roof, interior paint, exterior, landscaping, get familiarity with that type, with scopes of works. And that's really not that difficult. All you got to do is go to enough networking events and visit some properties with some contractors. And they'll give you a really good understanding of what you need to know. Then what I would do is buy the data, right? If your marketing budget is low and you don't want to go all in, spend your life savings right away, what I would figure out is the trigger, like what I call trigger data, the motivated data. So probates, people that just received a notice of pendants, people that are going to sheriff's sale, tax liens, anything you could find that's gonna motivate a seller to want to sell, an owner to want to sell. Skip trace those phone numbers, and you could get all this data on PropStream. Sometimes that data is not as good as actually going into the courthouses, but to keep it very simple, I would go on PropStream, find that data, and you could do small filters, and honestly, you can find out how much equity they have. I would target the ones that do have equity, right? So layer equity with 60% or more equity, 40% more of equity with the motivated points of data. Take all that. I would personally go through Lead Sherpa. I found a lot of success. I've used a lot of different skip tracing platforms, but Lead Sherpa has been very promising for me. Skip trace that data, get the phone numbers, and either you can start dialing them yourself on your cell phone like I did when I first got started, if you don't want to put money out, and really just learn the game, right? Build a script, how to talk to people, how to get them to say yes to you, to meet them in person. Learn how to, get a purchase and sale agreement signed. And oftentimes these are new skills that you may or may not have, but the truth is there is a vast amount of education and people willing to help you. You just got to put in the work. So just start somewhere. I think that those are good action steps. Go to networking events. You have no idea how much value I've personally got through in-person networking events. Met two of my partners through networking events, guys that have helped me close my first deal out of completely going broke, saving my ass out of those situations. And people that I still lean on and call today for help whenever I'm coming across issues are all from networking events. So just get to work, man. There's nothing like it. Just put yourself out there and put in the hours. That's it.
I love it. Where do you see the, obviously we've had a huge run up in prices since when you got started till now. Is there going to be any kind of pivoting on your marketing if the market starts kind of, we're hitting maybe a short sale market, or what's kind of your take on what's going to happen over the next 12 or 24 months? And I know you don't have a crystal ball, but if you had to take a best guess.
We're always getting ready. And I'm glad you said that, Beau. I don't have a crystal ball, but what I can say is that we're one quarter away from a textbook recession. GDP-wise, the NASDAQ dropped more than it has in the last 13 years. Foreclosure rates have gone up 181% since last year, I believe. Interest rates are going through the roof, right? We don't know where it's going to stop, but hopefully it slows down a little bit. Inflation there's a lot of indicators that say there should be some sort of slowdown, correction, whatever have you. But the fact is that there is still pent up demand for homes and for affordable housing. And I think that with those market dynamics, I believe that, you know, we'll still be in a decent place from a multifamily perspective. But what we are getting prepared for is exactly what you said. We're starting to, what we used to stop doing. We used to do short sales. We stopped doing it. We didn't think it was necessary. But we believe that the time has come where we have to start training our acquisition managers on understanding what a short sale is, how that process works, because 181% of foreclosures is nothing to scoff at. I think there's a lot of opportunity coming on the way. And so, yeah, we're definitely positioning ourselves to start doing a little bit more direct mail and door knocking to short sales and share of sale candidates and converting those into deals.
And also, your business model is on the residential side, at least, is fast moving. You're not getting in and flipping. So even if the market's slowing down, you're going to hedge. You know, you're going to be more conservative on your underwriting, and just, you know, you're going to exit the property in 30 days or whatever. So it's not like you're staying in these for a long time. And now your multifamily business, is that still, you're buying local too? Or are you buying in emerging markets with these larger apartment complexes, or you stay local?
Well, we are actively acquiring here in New Jersey. We used to be a little bit more aggressive with the type of loans we took out, because our exit strategy would be a lower interest rate. However, you know, deals that were fantastic just a year ago suddenly don't make sense now. So we're being incredibly conservative on our exit strategies. We're doing a 50 to 75 basis point expansion on our exits and on our refinances, and anticipating rates to continue to grow up. So yeah, a lot of our deals no longer tie out, but we are actively still acquiring. We're now starting to go more into like long-term debt day one, buying assets that cash flow day one with room for value add, and buying them at a very low cost basis where, you know, we are getting a discount day one. So, you know, whereas we used to buy 10 different properties a year, we're probably looking at buying like 4 to 5.
Hi, Beau Eckstein here, and I want to thank you for being a patron of this YouTube channel, or if you're listening on iTunes, Stitcher, or any of those audio platforms. I want to give you my book for free that I just wrote. It's called Launch, Expand, or Buy Your Next Business Using SBA Financing. And you can simply go to thesbabook.com and you can receive a free copy of my book. That's thesbabook.com. And thanks so much for being a valuable listener or viewer of the show. And I hope you enjoy the book. It's a very short book. It goes into detail. You can read it very quickly and get a good overview of all the benefits of using SBA financing. So thanks so much, and I'll see you soon. Any other food groups or asset classes you look at? Bless you. Any other food groups that you look at, or are you just really sticking in the residential multifamily type of assets?
I'll tell you what, I love self-storage. I mean, anyone who knows a little bit about storage knows it's a great asset class. I could give you high levels, but you know, it's performed better returns wise than multifamily, single family, and the stock market over the last 3 decades. It's more recession-proof. Values have dropped less than all assets. All those, you know, the stock market, multifamily, residential, in any recessionary environment that we've experienced in the last 30 years. And delinquencies are lower. So it's just proven to be pretty recession-proof. However, I think there's a lot of sharks in the water chasing that asset class right now without any solid underwriting or a good understanding of how to do market research on these assets. And so they're overpaying, and they're going into and buying deals where there's a lot of supply and not a lot of demand. And I'm seeing that happen quite often. Guys that I would think are, you know, intelligent investors are buying deals that I personally, I'm shocked that they're buying. So I would say there's definitely still room in the self-storage space. I've been keeping my eye on it. I'm considering moving into it. But right now we just have fantastic deals in the multifamily space coming up. And so we're for over the next year or two, I think we're going to be pretty focused on acquiring multifamily.
What do you? Is there any other kind of vertical integrations you're going to do? Like it seems like you're constantly evolving your business in a short period of time, because this business is first started what, like 5 years ago. I mean, you haven't been doing this all that time, and you're very sophisticated with not spending that many years in the business, right? Like there's people like me that have been, believe it or not, I'm 44 and I've been doing in real estate for a long time, but you were able to really kind of grow quickly. And then, the lending platform, then the multifamily. Where else do you see opportunity, or are you like content where you're at right now? It seems like you're going to be growing a huge organization. So I'm curious on whether do you look at, like, are you into the Bitcoin space, the crypto, or is that not something you're into?
I appreciate the kind words, Beau. I started I'm just an entrepreneur. I get just like every entrepreneur, the shiny object syndrome is real to me too. So I've dibbled and dabbled in the crypto space, option trading. I started a car dealership. Like I pretty much I did the Amazon drop shipping. Tell you what, it's all a distraction. Of course, I made money and I've lost money in these other businesses, but even though I'm young, I'm 27 years old, started a business just 4 years ago. I started aggressively acquiring knowledge in the real estate space when I was 19, working for some of the most sophisticated investors in the country. And so I paid my dues. My 10,000 hours are way up in just real estate investing. And so that's where I'm focused. I do think that there's huge opportunity where it's like the emergent, it's like merging in what was previously a old man's game into with technology and data. Definitely gives my company a competitive advantage in scaling and growing quickly. So the first thing we focused on was sourcing deals and sourcing, borrowers and loan opportunities. Where we're focused on now is raising capital through the same data-driven approach, right? I know a handful of brilliant marketers out there that use technology and data and have raised a couple $100 million. I think that my focus now is raising money and placing that money into. Now is the time, right, to be incredibly conservative, working with sophisticated operators. So my focus now is scaling through working with accredited investors that want to place their money into great deals that have strong fundamentals, that are going into long-term debt, right? The cash flow day one, helping people place money into good deals with great operators. So that's really the next transition to my business.
So when you say that, are you looking at doing some kind of co-GPs with some larger syndicators that you feel that are a good fit for your business model, where you're going to bring some of your, because now people, you have a track record, right? And there's investors that you've returned good returns to, and they look for you for advice. And so you're able to kind of grow faster by partnering with good operators. Is that what I heard you say correctly?
Yeah, it's always been about partnering with good people, and that's what we built our business around, working with great people. And thank God we've partnered with the right ones. But at this point in time, yes, instead of me trying to create a vertically integrated company that has property build this massive organization in probably one of the worst places to invest in, New Jersey. I wouldn't say the worst, but it's definitely not as attractive as your Floridas or your Tennessee. There's definitely Arizona. There's definitely better yield out there with guys that'll trump me any day of the week with what they know. And so Yeah, I've been putting myself out there, networking with people way better than me, way smarter than me, getting way better deals than me, and helping them raise money on their deals. And so it's been an exciting journey thus
Yeah,
far.
my family, I used to live on the East Coast. I'm in Las Vegas now. Grew up in the Bay Area mostly though, but my grandfather was a professor at Newark Technical Institute, I think, pretty close
Oh,
to you. And I have family in Point Pleasant Beach, New Jersey. My parents are from Old Bridge, New Jersey. So
wow.
and I spent a lot of time as a child, and I lived in Allentown, Pennsylvania. So I was an East Coaster for a long time. So I heard you on another interview, and I could hear the East Coast accent, so I was kind of cracking up about it. Yeah,
Yeah, I guess.
I if I were to like be blindfolded, I would thought you would be Italian.
Well, my girlfriend's Italian, so I was having a gabagoo moment a couple of days ago. I had to go to the deli to pick up some mutts, and yeah, no, I get it.
Yeah, your nationality, you're Korean.
Yeah, I'm Korean.
Cool. I have a adopted Korean cousin actually. So
No way.
yeah, I do the Korean barbecues here in Las Vegas. They're pretty fun. I like going in. You cook all the meat on the table, and so I was listening to your podcast where you had gotten out of shape. You had gained like 50, 60 pounds. So let's kind of wrap up this episode because it's been really good, and I don't want to take too much of your time. But talk to me about, like, I heard you talking about attraction, and that was big. You actually brought in like an EOS specialist, and they came in and like helped you grow your business. Didn't you go from like 4 employees to like 100 or something crazy like that?
Yeah, I mean, it's the key is like, I mean, starting a business and then scaling one is it's just two different worlds. I went into business at a very early age, and just being surrounded by first generation entrepreneurs. My mom, my dad, who gave up the business world to be a missionary, but my uncles, my aunts, it must be a Korean thing, but all my relatives went into entrepreneurship, and having spent time with all of them, I found that they worked themselves to the bone. Without them, there was no business. And I think when I was like 19, I read the book 4 Hour Work Week by Tim Ferriss, and I was like, holy moly, that's the type of life I want. That's the type of freedom I want. And like E-Myth and all these books I read while I was still in corporate America, and I said, man, I could figure this thing out. And so, starting my business, year one, me and my partner Eric, we were always telling each other, we're going to get out this year. This is the year we're going to get out. And then 2 years later, this is the year we're going to get out. We're going to get out this year. Going into year three, it was like, man, we ain't never get it out, are we? And it was like there was the light at the end of the tunnel kept shrinking and shrinking as you realized there was so much to be done before you could get out. And we had been reading books like, I mean, we're like, we always try to learn. Like, that's just one thing that we always do. I mean, without the books and the mentors and the masterminds that we joined, I really don't think we'd be anywhere near where we are right now. But having read some of these books like Measure What Matters, we tried to implement OKRs into our business. And having read 12-week year, we're like, oh, we're going to try a 12-week year. Or read books like Traction, and finally Traction really stuck out to me, at which point we tried to implement it gruesomely for like 9 months, just miserable. Quarterly planning was just horrible. The reporting was all off, and it wasn't until I joined the mastermind group and spoke to one of the leaders there where he recommended that I hire an EOS coach. So when we hired this coach, he came on, and I mean, it was just life-changing. Honestly, he helped us implement leadership, accountability charts, helped us build our stoplight reports, helped us teach us how to keep on track and keep the agenda moving on our level 10 meetings. And I think that's really helpful for a company where the leaders are all young and have egos and are hot-headed, right? Having someone else come in externally and really moderate and control the group. And so personally for me, and I know almost 90% of the people in this mastermind have hired EOS implementers. It's life-changing stuff.
Is that a multifamily mastermind or just a general mastermind?
It's a real estate mastermind. It's single family, multifamily, fund managers, lenders. I mean, it's called Collective Genius. It's the best mastermind. I think it's the best mastermind I've ever joined. Obviously, I haven't joined that many, but thus far it's been very lucrative being a part of that group.
Yeah. No, I mean, success leaves clues, right? That's a cliche saying, but
yeah,
it's like just do what other successful people are doing, pick their brains, and get around people that are really smart, and that's what you've done. And you're constantly kind of reading and studying, and you just kind of, it's not rocket science. It's just that, for whatever reason, you and your partners are able to implement better at a higher level than some other people. But I think the great thing about podcasting here is, like, you get in the mind, like, I just got a lot of value out of this conversation, right? And everybody who's going to watch this can take a little nugget, like even just how you broke down, like, it's not rocket science, how you're getting the data, and then at the end of the day, you're making those calls, or you have systems that people are making those calls. They're trained on how to talk to people, and then you get a mass amount of leads. That's the start of it. Then you built this cash flow machine. Once you have the cash flow coming in, it's easier now to buy assets, because now you have millions of dollars coming in where you need to deploy that out because you need to reinvest. Then you actually buy these assets, then you cost segregate them, and then you offset your earned income, and then life is great. And then from that, and then more people want to join your network, and they don't have the time to do what you do, and that's where you get your LPs, your passive investors. And then now your business has evolved to where you're sourcing deals and you're creating partnerships with other really good operators throughout the nation. And that's where you're at 27. So when we interview you in 10 years, you'll be on an island somewhere, hopefully, and figuring it out. Or you'll probably be writing a few books by then. I have a feeling that you have a lot to. You have a good outlook on life too, and you seem like a happy-go-lucky guy, which is great. You're not too stressed out, and enjoy yourself. So
yeah, I would say just one thing to add about to the advice that I would give early on to people starting. Crazy statistic that I read from Think and Grow Rich and Success Through a Positive Mental Attitude. 98% of people who don't have definitive purpose and a positive mental attitude have a negative outlook on life, right? And without definitive purpose and a positive mental attitude, like, forget about it, right? Your chances of success are it's grim. So something I started very early without even reading the book was I fell into the Word and God, and I knew very early on, thank God, that like a definitive purpose of where I wanted to be, and it was in service to others, right? And so I revisited that at 21. Probably read the abridged version of Think and Grow Rich 400 plus times, right? Something that I still read today is my vision. Every morning, every night, I know exactly what I want 10 years from now. And I think having that vision and that purpose for life will allow you to just brush off all the crap that you need to do in order to get there. So the knowledge and the headaches and the failures, all the drama with partners, employees, all of it has a meaning. It's to get you to the man you need to be or the woman you need to be 10 years from now, where your vision lies. So I would start with that. I would read one of those books, but yeah, huge.
I love that, because for whatever reason, I always want to, like, write my I've written visions before, but I've never kept it, right? Like, and has my vision played out where I wanted it to? No, it hasn't. You know why? Because it hasn't been in front of me, and I haven't been reading it every day like you have, right? So, like, it's just, I hear it over and over again, journaling and things like that, and you're reading this vision a couple times a day. You're seeing it. It's in front of you, maybe at your desk or by your bedside, right? And success leaves clues, people. Right? Success leaves clues. It's not like you're not an overnight success. And when I say you're a young guy and you're super successful, but listen, at 19 years old, you were learning from billionaires or multi-millionaires, learning from people that you absorb their information from, and like that's so like people might say, oh, he's lucky he got in real estate at a good time and crushed it. No. Look at the story. Look at the iceberg, right? The picture of the iceberg. There's just the top of the iceberg, but look at under the water. There's all this iceberg, and that's what these interviews do. Like, this is a great story. It's not like you're an overnight success. You had a lot of failures, but you stuck it out, and you actually every day you're living what you're talking about. So I mean, that's the biggest nugget I took out of this call or this Zoom or interview or whatever you want to call it. So that was awesome. You delivered some fire today for sure. You have great energy. Where can people follow you? Where's the best place to send somebody to follow you?
You can follow me. This might be weird, but if you ever need me, you need advice, you can shoot me a text message, 201-973-7029. I have a Instagram. I have a personal website called David Choi, CHOI.biz. And so you can follow me there. And yeah, I'm looking forward to connecting. If everyone needs any advice, just reach out.
That's so awesome. That's really cool that you did that. Anyways, everybody, I hope you enjoyed this. This was like pure magic today, guys. It's like there's no rocket science, but I think what we talked about today is achievable from anybody out there that's listening, whether you're just getting started in your entrepreneurial journey at 19 years old, or maybe you're 44 or 50 and you're like, okay, I'm not doing it where I should be doing it. Take the baby steps, start back, go back to day one, write your visions down, where you want to be 10 years from now, what that looks like. And it may not be that you own 5,000 multifamily units. That might not be what you want. Maybe what you want is $30,000 a month of net cash flow where you don't have to think about anything. It just, the property manager sends you your statements and you're there. Or I always tell people, the best place to be is have so much cash that you just be an LP. You invest with good operators. That's like the least amount of stress, right? Because it's the operator that needs to perform. If they don't perform, they're never going to get another dollar from an investor. So that's perfect. So anyways, guys, hit the like and subscribe, and I'm going to keep bringing guests that provide tremendous amount of value. It's free for you guys. You just plug in and get inspired. It can't be better than this. So we'll see you on the next episode.